The meme coin market as a whole didn't have too much of a great time recently. However, DogWifHat tends to perform pretty well. The question is why? Let's have a look at the on-chain data. Let's see what's going on, who's buying here, who's selling here. Let's try to figure out what's happening behind the price action. Now we are currently at 89 cents. In the last week, WIF appreciated by 15%, while at the same time, Bitcoin barely moved. It only went up by 1.5%. Now this is not the first video on DogWifHat on this channel. I've published several videos before. The very first one came out 540 days ago, and that video garnered a lot of attention. The performance of the average video in terms of views is indicated here by this light gray area. But DogWifHat, that very first video, that's the blue line. So that was the very first video. The most recent video, which was published 2 months ago, just performed according to average. So does this mean that attention for the asset is declining over time? Could this be potentially bad long term? Let's have a look at some more data points. Now the first video was published when the price was still at 27 cents. So that was over here on the chart. Subsequently, the price shot up by 1,500% to then see a massive crash by 93%. But recently, we start to recover again. And the question is why? And how high could we now go? By the way, I publish videos on various altcoins regularly on this channel. I try to cover the ones that still have upside potential, so feel free to subscribe over here. Now, trading in crypto in general is a game of risk versus reward. We always have to think about how much potential upside is there really compared to the risk that we are taking. Can we do a 2x or a 4x or a 10x? Is it worth taking on all of that risk? One way to estimate the upside is to just look at comparable assets. What we see over here is the largest Solana meme coin. So at number 1 is the official Trump token with a market cap of 1.7, 1.8 billion. DogWifHat is roughly half that size with 0.9 billion or 900 million. So this gives us an idea of how much potentially the asset could outperform versus the rest of the market. It's a 2x, and everything beyond that has to come from the meme coin market as a whole expanding or from crypto in general going up. But if it's just about idiosyncratic upside, as in how much outperformance could we expect, after a 2x the air is definitely getting quite thin. Now, DogWifHat could almost be seen as an OG meme coin right now. It was launched before Pump.fun was popular, and thus the trading, the kind of trading that's now happening for the token has changed. In the early days, DogWifHat was mainly traded on chain, on the Solana chain. Not anymore. What we're seeing here is the trending tokens on the Solana chain ordered by their liquidity, and DogWifHat cannot be seen anywhere. In fact, the largest liquidity pool of DogWifHat has 13.4 million, but there was only 2.4 million worth of trading volume on chain. What we're seeing here on the left side is the number of new traders per day over time, so that's the last month. On the right side, we see the number of token transactions per day. We can see how there's less and less new first-time traders and how the number of token transactions stays somewhat flat. What we're seeing over here is the trading volume in US dollars on the left and normalized to 100% on the right. So we are segregating the trading volume based on wallet size. Small retail is the wallets that have less than $1,000 worth of the token. And it seems like over time, the small retail investor trades the token, relatively speaking, more and more. Even though overall trading volume on chain has definitely declined massively. But the most important of all of the charts is probably this over here. This is the number of retail investors versus whale investors over time. We can see how retail continued to accumulate the token up until the middle of November of last year. Since then, the number of retail investors is going down. We are counting a retail investor as a wallet that has at least 1,000 WIF tokens. Now in the middle, it's 10,000 tokens. That's now $10,000 worth of the token roughly. And they've stopped accumulating very quickly after launch already. Very similar to what happened with the whales. So that's another 10x. That's now $100,000 of minimum holding. There's constant selling. Yes, the selling might have slowed down somewhat, but really since February of this year, no wallet cohort is buying DogWifHat anymore on chain. And that then begs a question. How is something like this then possible? Since the 8th of April, to today, DogWifHat went up by 185%. How is this possible when the number of investors is not going up? The answer is that the kind of investor that's currently in this asset has changed massively over time. In the early days, it was retail. In the early days, it was accumulation, long-term buying on chain. Now that's changed. On chain, there's much less US dollar trading volume now. Now price discovery happens with the bets on the price, the perpetual futures market. Because have a look at the trading volume in the last 24 hours. We had 89 million worth of trading volume on Binance. That's on the spot market. But compare this to the perpetual futures market. We had 561 million worth of trading volume in the last 24 hours. Price discovery now happens with leverage. And most of those traders that use leverage with perpetual futures don't want to hold the token long term, right? They just want to get in and out quickly. So whenever we see a short-term rally, those kinds of rallies also tend to deflate at some point. Most perp traders bet on rising prices of WIF. That's why the funding rate tends to be positive most of the time. So the longs have to pay the shorts in order to bet on rising prices. Have a look at how much the spot market correlates with the open interest on the futures market. So as there's more bets on the price, the spot price itself goes up as well. And as there's less speculation with DogWifHat, spot price tends to go down. The price in general tends to move in the direction where most people get liquidated. And since most of the time, most people bet on rising prices, it's mainly the longs that get liquidated during price drops. Now, within crypto, the decentralized finance sector looks quite interesting because across all blockchains, we are not yet at all-time highs in terms of total value locked, in terms of capital that's floating around. Asset prices in decentralized finance were way higher at the end of 2021. Then we had the Terra Luna collapse and the subsequent bear market, and now since October of 2023, the recovery. But we are still quite far away from the all-time high. Yet when we look at the number of stable coins that are now floating around, that is at an all-time high. In other words, there seems to be less inherent leverage in the system. So I do not expect a major protocol blowing up tomorrow. But it is important to watch both metrics, the TVL in DeFi, but also whether or not money is flowing into the space, right? This is what stablecoins are all about. So we are a little bit in no man's land here, right? It's a bit of a gray zone. We are not extremely cheap historically, but we aren't that heated either that everything is going to blow up tomorrow. The way how I navigate this is using the very badly performing altcoins. And I am not buying the altcoins. I'm doing the exact opposite. What we see here are the smaller altcoins with their performance in the last year. And just have a look at this, right? Bitcoin in the last year went up, but all of those altcoins, not all, but most of them went down. And so I'm betting on falling altcoin prices. I'm also hedging that versus the general macro. As in, if now Bitcoin and Solana and Ethereum was to suddenly go up, then my short positions in the altcoins wouldn't be affected by this because the relative performance of those bad altcoins to those major players matters. What we're seeing over here is my perpetual futures account with the current positions that I've opened together with the hedges. So it's expected that the hedges go in the opposite direction to the altcoin shorts. I've started the account with 40K 2 months ago. Now there's been more than 25% return already. I forgot to set a proper stop loss over here. That's why this went down more than I wanted to. Without that massive drop, the line would look much nicer and it would have been even more return. But 10%, more than 10% per month is more than enough for me. And so this is then how that works, right? We're just betting on poorly performing altcoins to continue to do bad. And this underperformance happens very constantly with very little volatility. And we can just flip this chart around, right? When we bet on falling prices, then it looks like this. Would you buy an asset like this? Would you buy something that continuously appreciates? Now this is a linear scale. On a logarithmic scale, it looks like this. Still, right? Very constant long-term growth under comparatively little volatility. So the chart isn't going up and down erratically that much. And I think this is really where the alpha far where the outperformance in crypto lies. It's not about finding the one or two altcoins that do a bit better. It's about exploiting the market structure. Now, why do we see so much red over here? Why do we see so many altcoins underperform that consistently? The answer is token unlocks. It's new tokens that hit the market and the demand not catching up to that growing supply. So this supply schedule here belongs to this asset. Every single week, there are hundreds of millions of dollars of unlocks in crypto. If money doesn't flow into the space at that rate, we see this kind of performance long term. Here are the tokens with most issuance in the next month. So for example here, right, WorldCoin is a token with a ton of additional supply hitting the market. And I shorted WorldCoin on May 23rd when we had a short squeeze and a very nice potential entry opportunity. So I shared that trade in the premium membership, that's thebitcoinstrategy.com. And then just a few days later, I closed the position. And yeah, if you've got proper risk management in place, you can make very nice returns. The community, of course, copy traded there as well. And so members got similar kinds of returns. But really, fundamentally, premium is not just about copy trading whatever I do. It's more about learning. It's more about exchanging information with the rest of the community and leveling up together. We want to take advantage of the market structure. We don't just want to blindly copy trade others. And so there are plenty of trades that I did not do, but that the community still benefited from. Crypto is a game of both luck, but also of skill. And the more we play the game, the less important the luck component becomes, and the more important the edge, the skill becomes. It's pretty much like in a casino, right? The casino does not know the outcome of a single game, but when the odds are in our favor, if we play often enough, we win. I mean, from the perspective of the casino, of course. And so I've published several tutorial videos on how to set this all up. How do we bet on relative evaluations, and how do we do this on Hyperliquid, which is the leading platform for perpetual futures in decentralized finance right now. And here, this video is probably even more important. How do we do proper risk management with that? Because while those trades look impressive, it's all about the long term. Most trades make money when we follow that strategy, but some don't. And we don't want to blow our entire portfolio just because of a single short squeeze. So yeah, feel free to check it out. It's currently $125 per month. If you've got a larger portfolio and you want to get feedback directly from me, you want to have a one-on-one session, you can also sign up for the yearly membership. For the yearly membership, you do get $250 off, so it's cheaper per month, but also there's a 1-hour Zoom call included. So I simply want to welcome everybody that makes a longer term commitment. And of course, we can talk also about other asset classes, not just crypto, how we are properly diversified across stocks, precious metals, property, etc. A link to premium should pop up directly over here. Just click on that link. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.